Hey guys, Max here, and this is your daily market update for yesterday, the 1st of February, and it was a pretty strong day all around. We will, of course, cover what happened in the markets, Australia and their monetary policy, some stuff from India regarding changes to their crypto rules, and then just a couple other things, so let's get right into it. Now, what happened in the markets? Well, they had a pretty strong day, as I just said. The indexes, for the most part, did quite well, especially if we look back to how poorly they were doing a week or two ago. The S&P 500 rose 0.7%, the Nasdaq rose 0.6%, and the Dow Jones rose 0.8%. The MSCI World Index, so worldwide stocks, did quite well as well, rising 0.9%. Basically, most indexes had a solid day for a couple reasons. The first and the new thing for the day is that we had some earnings come out and they were strong for the most part, which indicates that the economy is actually doing okay, so markets rallied a little bit. We will talk in more detail about those earnings in a moment. Of course, not every company did well, and lots of the reports came out after markets had closed, so they didn't all impact markets yesterday. Now, the second reason the markets did okay is because the Fed is once again running around doing damage control, trying to preserve asset prices. Now, this is something we've spoken about extensively, and the fact is that the Fed is terrified of causing asset prices to fall, and that it's a secret mandate that they have, but they won't admit to. Now, funnily enough, Bullard, who is the president of the St. Louis Fed, literally came out yesterday and during an interview accidentally let slip that the Fed doesn't want to disrupt markets. It is as clear as day. It couldn't be any more simple. The Fed is determined to sit on the fence, to make no real changes to the monetary environment, purely so that asset prices stay high and the people in charge stay rich. Now, the markets are seeing this in real time. They're seeing the supportive words from the Fed and they're rallying on it. They're excited by what they're seeing, so markets are pumping a little bit, trying to squeeze out every last penny while they still can. Now, the dollar had a slightly rough day, falling 0.3% against the benchmark, falling most against the pound by 0.6%. Bond yields advanced and the 10-year Treasury is now once more sitting at 1.8%, returning towards those highs that it reached a few weeks ago. Oil prices as well have continued to rise, with WTI crude oil sitting now at $88 a barrel, and there are some concerns, some analysts predicting that we might see oil prices rise above $100 a barrel. Gold had an okay day, rising slightly, sitting just a touch above $1,800 an ounce as well. Now, that's the broad markets. What happened with earnings? Well, we will start off, of course, with the strongest of them all, and that is Alphabet or Google. I'm just going to say Google, and it was a crazy good report. Now, Google grew its revenue year over year by 40%. Now, for a company of that size, that really is absolutely incredible. It beat its estimated quarterly revenue of $72 billion by making $75 billion. And across the board, there was growth everywhere. YouTube brought in almost $9 billion of revenue that quarter alone, meaning it is now the biggest streaming platform in the world, bringing in more money than Netflix or anyone else. Cloud computing brought in over $5 billion for Google. Traffic acquisition from Google searches brought in over $13 billion. The numbers here are ridiculously high, and as you would expect, the stock has pumped up pre-market. It's up over 9% right now, which for what is almost a $2 trillion company is absolutely incredible. It also announced a stock split of 20-1. So if you own one Google share, you will soon own 20 instead. The idea behind this is that it makes the stock more accessible. Right now, each share is about $2,700 each. That's a big barrier to entry for small investors, and this stock split will probably bring more attention and more investors to the company, so this is a little bit bullish as well. Now, I do want to speak for a moment about YouTube in particular, which is owned by Google, of course, and just how incredible the business model that YouTube uses is. Now, of course, we all know that Netflix has had a meteoric rise recently, and it's a $200 billion company now, and it used to be a $400 billion company. But the fact that YouTube alone brings in more money than Netflix is almost laughable. The fact that Netflix is even considered a FANG stock at all is ridiculous as well, because Netflix isn't a tech company, it's a media company. It produces or it buys the rights to show its customers media, and they charge a monthly subscription service for it. Yes, it has a very nice platform, and yes, it has an algorithm to suggest films or TV shows, but to be honest, the algorithm is awful. The problem here is that Netflix have to make the shows themselves, or they have to buy the rights to them, and that's a very expensive thing to do. YouTube, on the other hand, basically does the same thing. They allow people to watch videos, and while the style of video is mostly different, the reality is they are competitors with each other. What YouTube has done though, or really what Google has done since they bought YouTube, is they have found the perfect way to harness capitalism to make themselves rich, and they've done it by making other people rich first. YouTube realized that instead of creating content themselves, they're better off just being a platform that allows other people to enrich themselves by making the content instead. It is the perfect way to run a media business, whereas Netflix has to take risk and spend millions of dollars creating shows that maybe no one likes or watches. If someone uploads something to YouTube that no one likes, YouTube simply doesn't pay anything out because no one watches it. Then when there is someone who is successful, who builds a channel and gets loads of views and attention, when someone or a business puts that content out on YouTube, both the creator and YouTube get rich together. The risk here is negligible, but the rewards are huge and it's paying off big time. This is the best thing about capitalism. It's the fact that very rarely do people get rich on their own. Almost always, enriching yourself leads to enriching others along the way. Now, very slightly off topic here, but Roblox of all companies actually has the potential to go the exact same way as YouTube if they can just realize the opportunity that they have to become the gaming platform that allows their own users to enrich themselves. They can seize this same nature to make themselves hugely successful as well. The problem is, right now, the rewards for creators on Roblox are far too low to actually make this work, and the company is hyped up beyond where it should be, but it is one to keep an eye out for. Now, we did get a little bit off topic there, but basically, Google did super well. The stock is up something like $80 billion pre-market, so it's probably going to be a good day for the Nasdaq. Now, the next company to look at earnings-wise is AMD, who also did quite well. Their revenue is up 49% year over year, which is very nice to see, and they're projecting strong sales into the future as well, hoping to top $21 billion over 2022. Now, this is a beat on expectations, and the stock is also up over 10% pre-market right now, so it's probably going to be a good day for them as well. Now, unfortunately, it wasn't all good news for earnings though, as PayPal fell short of expectations and it saw its share price fall by about 18% so far, which is pretty huge, especially for a $200 billion company. It missed earnings by about 20% and it had poor revenue growth guidance for 2022 as well, so it isn't expecting to turn this ship around either. eBay has of course been transitioning onto their own payments platform and that has been hurting PayPal a little bit, but it's also just seeing slower user growth as well, and it's not too surprising why. It's an expensive system, the currency exchange rate is absolutely awful as well, and competitors like Wise are just far cheaper. Now, in monetary policy news, we heard from Australia and they are being a little bit dovish, but to be fair, their inflation isn't as bad over there as it is in some other places, so it isn't the worst thing in the world. They are scrapping their bond buying program, so quantitative easing in Australia is over, it's ending, but interest rates, or cash rates as they call them over there, are staying very low at 0.1%. They're also projecting some strong GDP growth this year and the year after, although there are some worries about how the economic slowdown in China might impact Australia and their economy. The two are, of course, very closely intertwined. A lot of resources are mined in Australia and shipped over to China, and that demand that China has for Australian resources might start to decrease, so this might be one of the secret reasons that Australia is being just a little bit dovish. Other than that, the country certainly doesn't need interest rates as low as they are, they just want them. Now, there is a big announcement from India in regards to cryptocurrency. Of course, India has not been a major fan of crypto in the past. They've moved back and forth on banning it outright or regulating it, and it seems like they've settled on regulating it, though they are being a little bit dodgy around it all, and the circumstances aren't exactly ideal. Capital gains for crypto assets are going to be 30%, which is really quite high, especially since it's such an easy asset to hide from the government. The government also has come out and said that no capital losses will be allowed and no business expenses will be allowed either. So if you make $1 million on Dogecoin, then lose $1 million on Shiba, then in any other sane country in the world, you wouldn't have to pay tax, but in India, you'll owe the government 300 grand. This is, in my opinion, a major mistake, and it's a surefire way to ensure that your citizens just don't tell you about any of the crypto they own. Why would they when the rules are rigged so much against you? Now, there's also a possibility that the law will actually tax transfers, not even profits. It's all a bit of a grey area right now. It's not entirely clear what's actually going to come through, what's actually going to happen. But if the government is trying to tax transfers at 30%, then this will literally gain the country zero income. Because guess what? The Laffer curve is real, and when you squeeze people this hard, they just hide their assets, and it's so easy to hide these specific assets. If nothing else though, this is progress. I guess it's better than banning crypto outright, and it's not like these rules are set in stone. They may end up not coming through at all, or maybe just being a fair bit tamer than this, so I'll be keeping my eye on this news story, of course. Now, in more crypto news, Russia has announced that it thinks its citizens own $200 billion worth of crypto, which is a huge amount and must be something like 10% of all crypto in the world. Now, no one knows if this is true, of course, and how the Russian government would know how much is in people's hidden wallets unless it's all owned by Putin and his oligarch friends, then I really don't know. Russia did come out and say that they were going to regulate, not ban crypto a few weeks ago as well, and if this is how much wealth they believe is in the country, then there's no reason to wonder why. It's because they want access to some of that wealth. Now, Ford has come out with some more plans for an EV shift in the future, maybe some spin-offs, and there's no wonder why when you see how well Tesla is doing with its share price. The problem is, this is mostly just talk, and Ford's business is going to remain almost entirely internal combustion engine vehicles for a decade at the least. Funnily enough, Cathie Wood actually has a really good take on this, and she's been talking about a bubble in Ford stock, saying that it's the real bubble, not Tesla, and I actually agree with her that there is a bubble in Ford stock, but that doesn't mean that there isn't one in Tesla. Now, Ford is very expensive right now. Its PE is sitting at about 29, whereas most auto companies usually have a PE of between 5 and 10. VW, for example, is a far better run car company than Ford. I actually think it's the best run car company in the world, and its stock is sitting with a PE of only 5. It seems like Ford is getting the EV boost that it's chasing. It isn't actually even remotely close to being an EV company, but its valuation is moving that direction because of their rhetoric and their plans, and the markets in the US are still just totally insane right now, so investors are buying Ford purely because they're talking about EVs. I really do have to agree with Cathie here. This is a bubble, but it's certainly not the only bubble, and it's also not the worst. Now, Dubai, of course, has been trying to attract loads of businesses to itself as it tries to grow into a business hub, and it seems to have captured the interest of Binance as well. The problem is, they were a tax haven for pretty much everything. 0 income tax, 0 dividends tax, 0 capital gains tax, and 0 corporate tax as well. But that seems to be changing, and they're going to start levying tax on businesses. It will be interesting to see what happens with this, if the city has built a strong enough business environment to hold on to these companies, or if this change of policy will start to push these companies back overseas. Personally, I think you don't go to Dubai for the business environment. You go there to hold on to your money. And if your ability to hold on to that money that you make decreases, then I would expect to see businesses start leaving. Now, finally, in some random news for the day, earlier in the week, Elon Musk tweeted a meme about Hitler, and in Muskrat fashion, one crypto degenerate created a Hitler Inu cryptocurrency, which of course rose in price by 5,000% almost instantly. If you ever needed one last kick to convince you that we're in a bubble, then this should be it. Now that is it for the day. We will be back tomorrow, of course. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio, and buy and sell alerts for all my own investments. It is now February, so if you've been waiting to join, then now is the perfect time. There's also a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up. You don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.